High income, six figures in student loan debt, no time to save for a massive down payment on the house that you love, fell in love with, or looking at. There's a program built specifically around this problem, and it's channeled towards medical professionals earning potential, not their debt to income snapshot on paper. It's actually called the Doctor Loan Program. Doctor Loan Program. It's designed for doctors that are just getting out of school, have a lot of student loan debt, their debt ratio is higher, and they want to buy a house. So let's dig into this and I'll kind of give you the details. Jim Kennedy here with Kennedy Mortgage in Austin, Texas. I help self employed property investors. I have a bunch of different loan programs that are helpful for most individuals buying their house. So let's get into it and I'll give you some details. Who qualifies? At least one borrower must hold an eligible professional designation. Physicians and specialists, MDs, dentists, ophthalmology, podiatry, psychiatry, optometry, pharmacists, veterinarians, advanced practice and allied health professionals, nurse practitioners, physician assistants, registered nurses, certified registered nurse anesthetists. Eligibility varies by program, but most of all these always qualify. Um, Medical residents, fellows, interns pursuing any of the above also qualify. You don't have to already be fully licensed and practicing. Like I said, you can be a medical resident or intern. So just keep that in mind also. What's great about this loan program, there's little to no money down, no mortgage insurance. A standard loan, if you're putting less than 20% down, you got to carry monthly private mortgage insurance to pay for that difference of the 20% down. So whether if you're putting 5 or 10 or 15% down, you're going to be paying mortgage insurance. Nice thing about this doctor loan is there is no mortgage insurance, and in most cases, you don't even need to put any money down. Um, with no mortgage insurance required, this alone can save you hundreds and hundreds of dollars a month. Just in that area alone. Then not to mention that no money down. 90% LTV to 100% loan to value. Depending upon your credit score and whatnot. It's a great program for doctors getting out of school, looking to buy their first house. So what's great too is, student loans don't sink your application. Standard underwriting, a standard loan program, it counts your income driven or deferred student loan payments heavily against your debt to income ratio. Even if it shows zero a month, it still calculates what your student loan payment's going to be after the deferral period. This program can calculate your debt income using your actual income driven payment, or exclude student loans entirely if they're deferred for at least 12 months into the future. So this is often the single biggest reason a new doctor gets denied on a standard loan application or approved on a loan. So this is one of the other fantastic benefits of this doctor loan is that student loan payments, as long as they're deferred for 12 months out, that potential student loan payment rather doesn't get counted against your debt to income ratio, which is one of the key factors in qualifying for a mortgage loan to buy your house. Yeah, another great feature about the doctor loan or the doctor mortgage is you can close on your home before your job even starts. Your new job starts. Standard loan requires 30 days of pay stubs. Um, This program lets you close 60 to 90 days before your start date using assigned employment or residency contract as proof of income instead. So that's the nice thing about this. You don't need to be employed yet. It's like I said, it lets you get this mortgage as long as you start within 60 or 90 days before your start date. So keep that in mind. So loan amounts and property type. Loan amounts run well past standard conventional limits. You can go up to $2 million on a more flexible down payment option. Say almost 100% financing on a $2 million loan amount. Options as high as 3 million, with higher down payment options. These loans are built primarily for your primary residence. There are some exceptions or some loan programs that I have out there for second homes or vacation properties, but definitely not uh, used or meant for investment properties. It's for your primary residence only. Are there any trade-offs with this mortgage? The rate could be a little bit higher, not much. I mean, there's a little bit more risk involved. The lender's taking on more risks with less down payment, no mortgage insurance, and like I said earlier, often loan amounts are exceedingly a little bit higher than your standard conventional loan amount limits. Um, some of these loans could be structured as adjustable rate mortgages, which are great too, depending upon the market and everything else. And more often than not, these get refinanced in a couple, 2 or 3 years anyhow. It's more or less the idea of getting into your new property with the lowest payment possible and to get you qualified, obviously excluding the student loan payments as long as they're deferred 12 months out. So to wrap up or recap, this program exists, it primarily exists only for medical professionals. You have a unique financial picture, high earning potential at the same time with heavier high student loan debt, limited savings time. It's underwritten around that reality, not against it. So if you're a medical professional, please reach out, see if I can help. Once again, Jim Kennedy with Kennedy Mortgage here in Austin, Texas. My phone number is 512-553-2111. I'd be more than happy to discuss and see if this loan program would be helpful for you. Thank you so much.